Welcome back, Alpha Hunters. Hope you had a great weekend. So this video is going to focus on two technical indicators, the MACD and Stochastics RSI, and we'll look a little bit at the original RSI indicator. We'll get into what they mean, MACD and RSI, and just how you can implement them into your charting and your trading techniques. I'm not going to go into a full-on breakdown of like the mathematical calculations behind the scenes for how to get them to work, because really that can be very boring. I will link below some of the resources. If you want to go get more in depth with them, feel free, but I'm going to give you some general guidelines for how I use them. So if you have ever seen these squiggly lines at the bottom of somebody's charting screen,
Oh, squiggly line in my eye fluid.
these are usually going to be the MACD and Stochastics RSI or RSI or some variation of these indicators. So this is why it is important to understand really these two indicators. These two indicators are a building block to a lot of different indicators that you see from different charting softwares and other people making their own indicators. These are a lot of the foundational type indicators that you will find in those, okay? So it's really good to just understand how these work, what they're saying. That way you can understand and potentially even make your own indicators, okay? So before we kind of go through and understand how these work here on a practical basis, let's go over to Investopedia and we're going to quickly go through some of the definition, just high level understanding of what these terms and indicators are. So the MACD is the moving average convergence divergence. Super weird name, I get it, but don't worry about all that, and don't really worry about all this reading for right now. If you want to come back and read that, that's fine. Let's just go right here to the key takeaways, okay? Moving average convergence divergence, the MACD, is calculated by subtracting the 26 period exponential moving average, EMA, from the 12 period EMA. I'll show you when we get back to the charts just what that is saying. The MACD triggers technical signals when it crosses above to buy or below to sell its signal line. The speed of crossovers is also taken as a signal of a market is overbought or oversold. And then lastly, MACD helps investors understand whether the bullish or bearish movement in the price is strengthening or weakening. So let's go back to the charting real quick and let's just kind of talk about what it is saying with all that. So I'm going to expand out here. This is the MACD. So the RSI, Stochastics RSI is down below. So we'll get to that here in just a little bit. So this MACD, there's three elements that's kind of going on here. This blue line, this is the MACD line, what is called the MACD line. The yellow line is the trigger line. And then the red bars that you see here, this is called the histogram. Now you don't do anything with the histogram. The histogram is self-calculating based upon the difference between the blue line and the yellow line here on my screen. So as the blue line moves farther away from the yellow line, the histogram gets larger. There's more of a difference between the two. And then as you see, the blue line crosses over and goes under the yellow line, the histogram will go negative, okay? So the baseline here on the histogram, this is the zero line. So the histogram will be above or below it based upon this zero line. And the blue, the MACD line, and the yellow trigger line will flow above or below it. And these things will indicate to us momentum of the stock or the asset that you were looking at. Now, another thing, if the MACD line crosses above the yellow line, like it is right here, that is indicating a bullish move, okay? If the blue line crosses below the yellow line, that is a bearish type move. Now, I'm not saying you need to trade that every time that they cross over, cross under. We will look a little bit more into that a little bit later as we kind of bring it all back together with the MACD and RSI. So let's go look at the Stochastics RSI to figure out what they are talking about. Now, the Stochastics RSI, to figure out the definition of this RSI, let's just go to the RSI real quick. The Relative Strength Index, okay? So that's the RSI. And let's just go ahead and get an idea of what the RSI is. The Relative Strength Index, RSI, is a popular momentum oscillator introduced in 1978. The RSI provides technical traders with signals about bullish and bearish price momentum, and it is often plotted beneath the graph of an asset price. I think we've already seen a little bit of that. An asset is usually considered overbought when the RSI is above 70 and oversold when it is above 30. The RSI line crossing below the overbought line or above the oversold line is often seen by traders as a signal to buy or sell. The RSI works best in trading ranges rather than trending markets. So that's kind of a key takeaway right here, this last one. The RSI works best in trading ranges rather than trending markets. This is one reason why I don't kind of use the RSI, because I care to track more of the trending markets. So this is why I do use the stochastic. So let's look at the stochastics RSI here. And they've kind of taken the RSI and they've adjusted it a little bit. So let's just check this out. A stochastics RSI reading above 0.8 is considered overbought, while a reading below 0.2 is considered oversold. On the 0 to 100 scale, above 80 is overbought and below 20 is oversold. Okay, so basically it's just saying the same thing on the second sentence. You got a 0.8 or 0.2, and this is going to be an out of a 0 to 1 type scale here on this first sentence. On the second sentence, it's a scale of 0 to 100. It's pretty much saying the same thing. Don't freak out if you see a 0.8 or an 80 or a 0.2 or a 20. It's pretty much going to say the same thing. Overbought doesn't necessarily mean the price will reverse lower. Just like oversold doesn't mean the price will reverse higher. Rather, the overbought and oversold conditions simply alert traders that the RSI is near the extremes of its recent readings. So that's going to be key when we look back at the charts, all right? A reading of 0 means the RSI is at the lowest level in 14 periods or whatever look back period is chosen. A reading of 1 or 100, remember that scale of 1 or 100, with 1 or 100 being the highest level, means the RSI is at the highest level in the last 14 periods. Other stochastic RSI values show where the RSI is relative to a high or low. Okay, so with all that being said, let's go back to the chart, see if we can make sense of some of this. So I'm going to expand out this RSI real quick so we can see it. So this is kind of what it's talking about. Anything below the 20 line, so you see the 20 line over here, this is the oversold area. So whenever it gets here, typically you can see that it starts to not be as much selling coming in. It starts to be less selling, maybe some more buying, resting, those kinds of things. It doesn't necessarily mean that the stock is going to turn bullish, but just that it might not be as much bearishness coming in as there was previously. Now remember, anything above the 80 line or 0.8 line is going to be the overbought range. And this is typically where you'll see bullishness kind of pull back a little bit. There won't be as much movement in the bullish direction. It might rest or it might turn over. It doesn't necessarily mean the market will turn bearish. It just means the momentum in that direction has already been a little too strong. So that's a little bit of a look of the stochastics and RSI. And you can definitely use both of these for like crossover type plays on their different lines. Okay, now let's get into a little bit more of the nitty gritty. Okay, so that's a little bit more of the high level stuff. So now we can see both the MACD and the RSI here. So before we look at the settings potentially for both of these and how I have them set up, I just want to give you some 5 general tips about indicators, okay? 1, there is no silver bullet indicator or group of indicators to make the best trading scenario. Number 2, there is no silver bullet settings for any indicators to make for the best trading scenario. Tip number 3 is set up to how you want to trade. If you want to capture all the little movements, you're going to use a little bit faster indicators. You want to set up and mess around with the settings to figure out what you want to capture in your trading or what you want to track. Number 4, setups for your indicators most likely won't work across different stocks. So if you find a really good indicator setup on a certain time frame, for, let's say, Apple, for instance, it will most likely not work if you go over to a stock like Caterpillar. The indicators that you set up for Apple are giving you a different feel and reading for that momentum of a stock compared to the kind of momentum you would get for Caterpillar. So they're not going to be feeling the same. And then general tip number 5 is setups most likely won't work across different time frames. So if you set up indicators to work across the daily charting pattern, if you go intraday, they probably won't have the same reading or feel, okay? So if you do use this on a daily and you go to a 5-minute intraday time frame, it probably won't have the same feel. And understanding 4 and 5, that these could give you very bad indications of when to get in and get out of stocks. That could lead to unprofitable position taking. So let's look now at potentially what settings you can mess around with on some of these. I have set up mine to be a little bit more longer term on my MACD, okay? And the reason why is because I want my MACD to kind of give me the idea of the trend of the stock, right? You can see the stock here has a bullish trend. I want my MACD to give me a bullish trend type reading. And then I'll just use my stochastics to act a little bit faster and let me know when the potential bottoming areas are so that I can buy in to the market. So for the general stock that we're looking at here is the VOO, which is an ETF that tracks the S&P 500. And to get my MACD settings to where they're mostly here on the positive side, I just get bullish indication or bullish momentum type readings. You just come into settings and you can definitely mess around with the settings. You know, they're not locked in. I definitely wouldn't copy my settings exactly. I would definitely just get in here, play around with them, move them around, see what you like, because everybody's got a different timeline, different time frame that they like to look at. So this is more of what I typically like to use on a daily picture for my settings. It is not the silver bullet. So the same thing here with the stochastics. You get in here, you can just mess around with some of these settings. That way you can see what changes what and how things work for you, okay? So I'll just leave everything as it is, but yeah, definitely get in there. I would mess around with the settings. That way you can figure out what works for you. So this is typically how I like to read the MACD and stochastics together. Okay, so I'm gonna just kind of give you some high level ideas for how I like to use them. The MACD, I like to see the lines above or below the zero line, okay? If the lines are above the zero line, right, the zero line down here, if the lines are above that and they are staying above that, they're trending above that, if they get it below it a little bit, that's not a big deal. As long as they stay above it, that lets me know the trend is bullish, right? That's a bullish trend. So that's perfect. That's exactly what I want to see. So if I just scroll along here in the timeline, we'll see the lines stay in the bullish direction, okay? So that is typically how I like to see and use the MACD, okay? Whatever side of the zero line it is, it lets me know the greater trend of the market. If the lines are below the zero line, I would expect the market is trending in the bullish direction, okay? So where the stochastic RSI comes into this is if the market isn't trending in a bullish direction, anytime I have the stochastics readings gets down to the oversold area, I know that that's going to be a buying zone. So we have a trending bullish, and anytime we get a spike down to the oversold, that's going to be a buy zone to me. As long as the MACD is trending in the bullish direction, I just look for oversold areas on the RSI, and those are the ones that I will typically be buying. So we'll just go forward in time here, and we'll just look and see what kind of situations we come to, and as long as the MACD is in the bullish positioning on its scale, whenever the stochastics RSI gets down to the oversold area, that's when you're going to want to be buying. So that's typically how I like to see my indicators of the MACD and stochastics. So hopefully this is a little bit helpful, a little bit more of a guide, but you definitely want to get in there and figure out what timelines and settings work for you. So hopefully this was beneficial for you. Alrighty, take care, Alpha Hunters.